Dinar Shift. The global financial community is currently witnessing a moment of profound significance, one that culminates decades of persistent belief and speculation within dedicated currency holding circles. What began as a distant hope for a monetary shift involving the Iraqi Dinar IQD and the Vietnamese Dong of VND is now reportedly transitioning into an actionable, verifiable economic reality. After years of dedicated tracking of central bank directives, monitoring geopolitical policy, and analyzing complex financial narratives, confirmation has reportedly emerged that a pivotal stage, often termed Tier 4B, has been activated. This development marks a transition that many holders of these currencies have viewed as the ultimate validation of their research and patience, moving the concept of a revaluation from a topic of online discussion into a practical domain supported by institutional preparations. This reported activation, therefore, is not just a passing headline but an event that carries the potential to redefine financial expectations for a global community of participants who have held faith in this eventual outcome. The magnitude of this reported financial revelation is underscored by concurrent discussions surrounding a global event slated for November 2025. This planned gathering is being widely discussed as a symbolic celebration, intended to mark the long-awaited shift toward international financial realignment. Such an event suggests that the transformation is no longer a theoretical exercise but a sequence of actions actively unfolding across the global economic landscape. The echoes of these developments are reportedly being felt from specialized private banking units to major international financial institutions, suggesting a broad, coordinated readiness. This collective moment brings together economists, investment observers, and individual currency holders under a shared sense of optimism and vindication. The protracted journey toward a revaluation, once confined to the shadows of speculation, is now moving into its most critical and publicly visible operational phase, signaling a potential paradigm shift in how emerging market currencies are integrated into the global monetary system. For over 20 years, the notion of a large-scale, coordinated currency revaluation has primarily been sustained within a network of global online forums and private investor groups. These dedicated communities, comprising ordinary people from various walks of life, have spent countless hours dissecting official central bank announcements, tracking subtle shifts in governmental economic policy, and cross-referencing reports from multiple sources. Their goal has consistently been to discern the when and if this dramatic financial transformation would materialize. Consequently, the recent reports confirming the activation of Tier 40B have reportedly triggered a massive wave of palpable excitement through these circles, effectively replacing years of generalized uncertainty and anxious waiting with a tangible, operational focal point. This reported shift in status is a defining moment for those who have dedicated a significant portion of their financial focus to this eventual outcome. While the history of these communities is peppered with previous claims and rumors, many of which failed to materialize and led to widespread skepticism and fatigue among persistent holders, the current narrative reportedly distinguishes itself through institutional alignment. Sources indicate that numerous major banking institutions and established financial intermediaries are allegedly synchronizing their internal systems, finalizing specific exchange protocols, and preparing the logistical framework necessary to accommodate a potential wave of private currency redemptions. This level of comprehensive operational readiness is a key factor cited by observers as separating the current developments from past, unverified speculations. The preparedness suggests a move beyond mere conjecture and into the final stages of a structured, global financial undertaking. Further strengthening the current reports are indications that specialized currency exchange centers have reportedly completed rigorous system-wide testing, that all necessary compliance mechanisms have been finalized, and that coordination between domestic and international banking networks has reached peak efficiency. This intense level of integrated preparation across the financial infrastructure delivers a clear, though often indirectly communicated, message. The extended period of waiting may be reaching its conclusion. What started as an intricate, private idea shared among a small cohort of determined investors is now reportedly a significant topic resonating throughout the formal global financial system. This growing institutional activity is interpreted by many as the definitive sign that the years of anticipation are drawing to a structured close. Within the specialized revaluation community, the term Tier 4B holds a near-mythic status. This tier specifically refers to the group often characterized as the People's Tier, a massive collection of individuals, families, and smaller investment entities who made the choice years ago to acquire and hold currencies like the Iraqi Dinar and the Vietnamese Dong. Their collective hope was pinned on the idea that significant geopolitical stability and comprehensive economic reforms would eventually trigger a fundamental reassessment and reset of these currencies' undervalued rates. The preceding tiers in this purported adjustment sequence reportedly involved major governmental entities, vast global humanitarian funds, and influential international financial consortiums, each sequentially contributing to the overall monetary adjustment framework. Tier 4B, by its very definition within this context, represents the crucial public phase of the entire process. It signifies the point in the sequence where not just large multinational institutions, but average private citizens become direct, active participants in the culmination of the reported revaluation event. According to the most recent confirmation circulating from sources described as both credible and verified within the financial sector, a key step has been taken. Major banking entities have reportedly received their final operational directives. This means that exchange infrastructures have been fully tested, thoroughly approved, digital security protocols are firmly in place, and specialized call centers have been staffed and trained to manage what is anticipated to be an unprecedented volume of appointment requests and inquiries. This highly visible and coordinated level of institutional readiness is precisely what many analysts and long-time observers point to as the essential differentiator between mere rumor and concrete reality. The intense anticipation collectively surrounding the activation of Tier 4B is seen to symbolize more than just the promise of a significant financial opportunity. It is perceived by many as embodying a deeper, more fundamental sentiment: the hope that principles of transparency, fairness, and inclusion are finally being extended to the everyday citizens who exhibited foresight and unwavering belief when the concept itself was largely dismissed by the mainstream. This development is viewed as a validation of years of unconventional thinking and disciplined holding. Amidst the swirling excitement and continued speculation, a specific date has gained considerable traction and significance within various economic watch lists and investor platforms: November 2025. This date is rapidly being circulated as the potential culmination point for the Tier 4B process. Financial analysts suggest that this day could signify various milestones, such as the official, formal public acknowledgement of the revaluation, the final surge of private exchanges, or the exact moment when the new, internationally adjusted currency rates become visible across the major global financial reporting systems. Irrespective of the exact procedural trigger, November 5th appears poised to become a noteworthy date in contemporary economic history. The sheer coordination surrounding this proposed timeline suggests a potential event that could fundamentally redefine how certain global currencies are valued and officially traded. Already, institutional bodies in vastly different geographical regions spanning the Middle East, Southeast Asia, Europe, and North America are reportedly taking measures to align their complex financial software and recalibrate their intricate liquidity management systems in anticipation of this significant shift. Central banks and influential international organizations are closely monitoring every reported development, keenly aware that even a modest but confirmed revaluation ripple could carry profound consequences for global trade balances, cross-border investment flows, and the restructuring of sovereign debt obligations. The palpable sense of focused coordination and unified purpose that reportedly surrounds the November timeline lends significant weight to the claims that this long-promised event is no longer merely speculative chatter, but genuinely imminent. For the millions of private currency holders worldwide, that specific date, November 5th, now represents a convergence of hope, vindication, and the commencement of an entirely new chapter in their economic lives. The expectation is that this movement will not only affect individual wealth, but will also contribute to a broader restructuring of economic opportunity on a global scale, rewarding the perseverance of those who held on to the vision. As the sense of anticipation intensifies toward both the proposed November celebration and the subsequent formal rollout, the broader implications of this reported development extend far beyond the mechanics of a simple currency exchange. The global revaluation movement, which has been sustained for so long primarily by grassroots communities, represents a rare and compelling example of unity driven not by the directives of powerful governments or major corporations, but by individual citizens bound together by a shared conviction and remarkable persistence. This narrative highlights the power of collective belief in driving economic change. The planned global celebration, already being widely discussed across multiple platforms, is anticipated to focus heavily on stories of individual patience, the development of enhanced financial literacy, and the unwavering faith in the possibility of positive, systemic change. Observers note that such a publicly coordinated event carries immense symbolic weight. It is viewed as a collective, worldwide recognition that global economics can evolve in constructive ways that directly empower ordinary people and provide access to opportunity, rather than remaining the sole domain of entrenched institutional power structures. This aspirational element is considered a key factor in the community's longevity. Whether this celebration takes the form of massive virtual broadcasts, a series of coordinated local gatherings, or major international venues, the core intent is to affirm the belief that the world is transitioning into an age where financial transparency and truly equitable access to opportunity will come to define the next stage of global financial interaction. For the countless millions who have tracked the stories of the Iraqi Dinar and the Vietnamese Dong since their very inception, this moment is being viewed not merely as a major financial milestone, but as a deeply personal and collective victory, offering tangible proof that sustained commitment and dedicated preparation can finally align to bring about significant and lasting economic transformation on a worldwide basis. At the epicenter of this monumental reported financial transformation stand two distinct currencies: the Iraqi Dinar IQD and the Vietnamese Dong of VND. Their respective economic trajectories are vastly different, yet they are now intrinsically linked through the shared narrative of historical undervaluation, dedicated national reconstruction efforts, and a potential economic awakening. Iraq, a nation blessed with some of the world's most extensive proven reserves of crucial commodities like oil, natural gas, and various mineral resources, has always held the raw potential for robust national prosperity and financial strength. However, This inherent potential has been historically undermined by decades of internal and external conflict, severe international sanctions, rampant corruption, and persistent political volatility, which collectively kept its national currency artificially weak and largely disconnected from the nation's true economic capabilities. Crucially, over recent years, Iraq has made measurable, significant progress in rebuilding its core democratic institutions, substantially enhancing its fiscal transparency, and aggressively modernizing its vital energy and foreign trade policies. With foreign partnerships actively expanding and international recognition steadily increasing, the foundational groundwork for a significant and meaningful currency revaluation now appears to be both credible and highly measurable. Vietnam, in contrast, presents a different yet equally compelling narrative. It is a nation whose steadfast dedication to manufacturing growth, massive inflows of foreign direct investment, and rapidly expanding global trade influence have successfully elevated it to become one of Asia's most dynamic and fastest-growing economies. The Vietnamese Dong has traditionally remained strategically undervalued, a policy often implemented to sustain a high level of export competitiveness in the global market. However, even this successful economic model is showing clear signs of evolving and maturing. Together, the joint confirmation of IQD and VND revaluation signals a potential dual currency realignment that could fundamentally redefine not only their respective regional markets but also significantly reshape the global perceptions of monetary balance and inherent development potential across all emerging economies. The parallel strength of Iraq's resource wealth and Vietnam's manufacturing prowess provides a compelling, synchronized economic justification for a coordinated reassessment of their currency values within the international system. This dual narrative offers a powerful case study for global financial restructuring. The reported selection of November 5, 2025, as the pivotal date for the formal implementation and celebration of the revaluation event is not arbitrary. It is seen as both deliberate and highly symbolic. Major financial systems, especially those that operate across complex, multi-jurisdictional boundaries, rely heavily on predictable operational cycles tied to fiscal year closings, standardized settlement schedules, and quarterly or annual reporting structures. Choosing a date in the final quarter of the year is suggested to allow institutions the necessary time to synchronize critical rate adjustments, manage significant liquidity movements, and integrate essential accounting reforms with minimal disruptive impact. Sources reportedly connected to banking and governmental circles suggest that the early autumn period represents the optimal window for seamlessly integrating updated currency values into existing global financial databases, thereby enabling a smooth transition across all major trading platforms and established exchange mechanisms. Specifically for Iraq, the timing is seen to align with the publication calendar of the official gazette, the necessary legal medium for enacting major legislative and regulatory announcements, which adds an essential layer of legal validation and international transparency to the entire process. From a purely economic perspective, both Iraq and Vietnam are reportedly entering high-confidence phases. Iraq's significant oil-driven fiscal surpluses are actively reinforcing its national stability, while Vietnam's consistent surge in global manufacturing exports and sustained inflows of foreign capital continue to aggressively strengthen its balance of payments position. The timing, therefore, appears to reflect a much broader synchronization of internal national progress with a state of global institutional readiness. Far from being a random choice, the date of November 5 is widely interpreted as embodying a strategic convergence, meticulously designed to maximize the economic impact while simultaneously ensuring structural integrity across the fragile global financial system. Across the global financial landscape, seasoned analysts and respected economic voices are beginning to articulate the true magnitude of what the reported activation of Tier 4B actually represents. Their collective insights consistently highlight not only the immediate and complex economic implications, but also the deeper symbolic meaning embedded within these long-awaited developments. Dr. Karim al-Sojudani, a veteran Iraqi economist and policy advisor, has reportedly described the dinar's potential revaluation as a powerful act of economic and psychological restoration, a move that fundamentally reaffirms Iraq's rightful and autonomous place among the community of strong global economies. He emphasizes that this milestone signals the definitive end of a decades-long arduous struggle for fiscal credibility. Meanwhile, Professor Liam Tran, a Hanoi-based strategist and academic observer, has characterized the Vietnamese Dong as a hidden powerhouse, arguing that its historical undervaluation has effectively masked a national economy exceptionally rich in disciplined labor, rapid innovation, and formidable export capacity. He specifically notes that Vietnam's active participation in major trade frameworks, such as RCEP, and its strategic manufacturing partnerships with leading global firms have fully prepared its financial infrastructure for currency normalization. Concurrently, John Peterson, an American banking insider and systems consultant, reportedly stresses that Tier 4B's confirmed activation represents the final, essential operational green light that major banks have been anticipating for many years. According to Peterson, the confirmed infrastructure readiness and the now coordinated strategies for liquidity management ensure that the process can proceed in a smooth, professional, and orderly fashion. Collectively, these diverse expert perspectives strongly converge around a single, unified message: the revaluation event is considered genuine, meticulously coordinated, and actively unfolding within a highly regulated framework specifically designed for maximum stability, indisputable legitimacy, and sustained international confidence. This professional consensus is a crucial factor lending credibility to the ongoing developments across the financial community. For the millions of private currency holders scattered around the globe, the reported confirmation of Tier 4B and the accelerating movement toward an official revaluation represents something far more profound than a simple change in the numbers displayed on an exchange screen. It symbolizes the turning of a life chapter that countless individuals and families have dedicated years to envisioning. Across continents, people have quietly and patiently held onto their Iraqi Dinar and Vietnamese Dong, guided by a unique mixture of faith, dedicated self-research, and sheer determined perseverance against mainstream skepticism. For some, this moment carries the long-sought promise of financial independence, the ability to eliminate mortgages, erase persistent debts, fund education, or finally retire securely after years of disciplined saving and holding. For others, the event represents the profound potential to create generational wealth, enabling strategic investments in small local businesses, the development of affordable housing, and significant contributions to philanthropy and crucial community projects that possess the power to uplift entire neighborhoods and regions. Yet, alongside this tidal wave of justifiable optimism, financial experts and legal authorities are consistently issuing strong, necessary reminders to remain cautious and level-headed. Times of major financial opportunity are known to invariably attract opportunists and malicious scammers who frequently promise early access, exclusive redemption rates, or insider shortcuts in exchange for personal data or upfront payments. Holders are being strongly advised to rely exclusively on authorized financial institutions and officially verified redemption centers once secure official notifications are finally released. Crucially, no legitimate organization will ever request confidential personal information or demand funds outside of tightly regulated and secure official banking channels. In these critical weeks of final preparation, prudence, disciplined patience, and strict attention to verified, official guidance are consistently cited as the single best safeguards for all those preparing to take part in this unprecedented, potentially historic economic event. Personal diligence is paramount to securing one's position. Within the United States, insider reports and credible confirmations point to an exceptionally high level of systematic readiness across all major financial institutions, reflecting many years of intense preparation for the complex logistical possibility of IQD and VND exchanges. Banking giants, including Wells Fargo, Chase SBC, and Bank of America, have reportedly conducted extensive internal simulations and exhaustive system tests, specifically designed to guarantee full operational stability and integrity once the official redemption protocols are formally activated. These rigorous exercises have encompassed every critical element from core transaction software upgrades and advanced cybersecurity defenses to comprehensive customer service training, compliance verification, and robust fraud prevention systems. Furthermore, specialized redemption sites, which are meticulously designed to discreetly and efficiently handle high-volume currency exchanges, are said to be in the final stages of logistical preparation nationwide. Banking personnel involved in these sensitive operations have undergone enhanced confidentiality training to strictly ensure client privacy, while regulatory agencies maintain constant oversight to absolutely guarantee full adherence to all stringent anti-money laundering's AML and Know Your Customers (KYC) standards. This extensive, integrated infrastructure underscores the fact that the rollout is being treated not as a side project or mere rumor, but as a structured, professionally coordinated, and globally significant financial event that requires maximum institutional seriousness. Financial analysts interpret this of institutional preparation as an undeniable signal of genuine seriousness and multi-agency collaboration at the highest levels. For the individual currency holders, this intensive readiness is meant to ensure that when official notifications are finally initiated, the entire process is expected to be exceptionally organized, securely managed, and fully compliant with all relevant national and international banking regulations. This high degree of operational assurance is designed to allow participants to proceed with maximum confidence and absolute clarity at every single stage of the exchange process, minimizing the potential for error or confusion during the historic event. Even before the anticipated official public launch, subtle but unmistakable ripples of change are already being observed across crucial international financial markets. Analysts who are actively monitoring early indicators report a clear heightened sense of volatility and anticipation as professional traders, large institutions, and even national governments quietly begin to prepare for the massive implications of the Iraqi Dinar and Vietnamese Dong revaluation. Forex platforms have recorded near-record-breaking engagement levels, with discussion threads, sophisticated prediction charts, and detailed speculative modeling reaching historic highs, indicating a dramatic surge in interest. This extraordinary surge of participation reflects not just simple curiosity but a rapidly growing, professional acknowledgement that something fundamentally significant is indeed unfolding beneath the surface of the mainstream economy. In the critical commodities arena, oil prices have shown a stabilizing pattern consistent with renewed global confidence in Iraq's long-term economic and political trajectory. Meanwhile, gold prices have remained remarkably steady rather than spiking, which is a traditional indicator of overall market stability rather than deep fear. Across Asia, Vietnam's most vital trading partners, including Japan, South Korea, and Singapore, are reportedly and quietly revising major contracts and recalibrating their crucial export margins in pragmatic anticipation of a significantly stronger dong. Corporate procurement departments are reportedly factoring potential rate adjustments into their upcoming fiscal year strategies, demonstrating a level of pragmatic foresight rarely seen during purely speculative market cycles. Financial think tanks are increasingly describing this entire phenomenon as a potential monetary watershed moment, signaling that irrespective of any short-term market fluctuations, the revaluation narrative has definitively transitioned from being a fringe rumor into an acknowledged, primary driver of global financial sentiment. Markets are not merely reacting to news, they are actively repositioning themselves for an economic landscape that may soon look fundamentally and permanently different. Behind every paper note of Iraqi Dinar or Vietnamese Dong lies a profoundly personal human story. A complex narrative woven through decades of persistent belief, genuine financial sacrifice, and remarkable endurance. For the vast majority of holders, this arduous journey began many years ago, often sparked by initial whispers of an opportunity and the deep-seated hope that global economic restructuring could eventually restore a degree of fairness to historically undervalued currencies. Over the intervening years, these dedicated individuals collectively faced profound skepticism, outright criticism, and long, grueling stretches of crushing uncertainty from outsiders. Yet they steadfastly persisted, diligently studying complex economic data, meticulously following turbulent geopolitical developments, and maintaining a quiet but fierce faith in a future financial outcome that few outside their specialized circles truly comprehended. Today, as formal official confirmations and coordinated institutional movements reportedly lend significant, tangible credibility to what was once widely dismissed as fringe speculation, that very perseverance is finally being vindicated. This unfolding event is being viewed not only as a landmark in global financial history, but also as a profound human triumph. A collective testament to the power of resilience, conviction, and sustained, disciplined focus on a long-term goal. For some, the revaluation represents a personal liberation from crushing financial struggle. For countless others, it is the ultimate validation of a lifelong commitment to diligent research and unwavering hope against the odds. Regardless of the individual financial outcome, participants are now undeniably part of a major chapter that is highly likely to occupy significant space in future economic history textbooks. The vibrant global community of IQD and VN holders has successfully evolved far beyond a simple investment group. It has organically become a collective movement fundamentally defined by shared patience, deep-seated belief, and the powerful conviction that comprehensive transformation, however long delayed, is always possible for those who refuse to surrender their vision. While the reported confirmation of Tier 4B and the increasing wave of financial activity certainly provide ample reason for deep optimism and even collective celebration, this is equally a moment that demands level-headed discernment and an acute sense of personal responsibility. Dinar Shift reminds all viewers that it is not a provider of financial advice, and every individual's financial situation remains entirely unique, shaped by personal goals, specific timelines, and individual risk tolerance levels. The intense excitement that inevitably surrounds major revaluation events unfortunately attracts a host of opportunistic misinformation and malicious activity, particularly across the vast digital landscape. Scammers will inevitably claim to offer exclusive priority appointments, inflated redemption rates, or secret insider shortcuts designed to bypass formal, regulated banking processes. Such fraudulent offers are universally dangerous and must be ignored without any exception. The only legitimate exchanges that will ever occur will take place exclusively through authorized, verified financial institutions, strictly following verified protocols released through secure, official communication channels. Participants must vigilantly safeguard all relevant documentation, absolutely avoid sharing any personal or sensitive banking details with unverified sources, and ensure they consult with licensed, qualified financial professionals who understand their specific circumstances before making any major financial decisions. Emotional decisions made in the heat of the moment or in haste often lead to long-term financial regret. Conversely, thoughtful, clear-headed decisions made with a full understanding of the process are the only path to stability and security. As this historic process unfolds, patience remains as critically vital as it has been throughout the long years of waiting. Stay thoroughly informed, remain emotionally grounded, and proceed not with paralyzing fear or reckless haste, but with the same clarity and measured confidence that successfully sustained this dedicated community through the long years of anticipation. After decades of intense speculation, countless hours of detailed analysis, and the unwavering collective patience of a diverse global community, the long-awaited moment has reportedly arrived. Tier 4B is confirmed, and with it, the highly anticipated Iraqi Dinar IQD and the Vietnamese Dong of VND is reportedly moving into its final phase. What was once consistently dismissed as mere unsubstantiated rumor has now reportedly evolved into a tangible financial reality, robustly supported by coordinated institutional readiness and credible confirmations emanating from respected financial sectors all across the world. The clear timeline for celebration and full activation has now been defined, marking a genuine, powerful turning point in modern economic history. For millions of ordinary, dedicated holders, this moment represents the profound culmination of a deeply personal journey defined by unyielding belief and quiet endurance. A moment where long-held persistence finally meets undeniable, tangible proof. Across specialized online forums, localized community gatherings, and private investment circles, there is a powerful, shared recognition that a long and challenging chapter of patient waiting is definitively closing, and a significant new one is being meticulously written in real time. Yet, even as the excitement continues to build, the call remains strong for responsible, measured preparation. Gather all necessary documentation, meticulously confirm all your personal information, strictly follow only official communications from verified sources, and remain continuously vigilant against all forms of misinformation. The collective energy and resolute belief that sustained this global movement for so many years must now be thoughtfully transformed into prudent, decisive action, strictly guided by foresight and purpose. This unfolding event is not merely a financial statistic or a fleeting economic milestone, it is the living embodiment of history in motion, a powerful, global proof that disciplined perseverance can fundamentally reshape the financial world. The successful revaluation IQD and VND will not only dramatically influence major bank ledgers and digital exchange screens, its impact will reverberate deeply through countless households, local communities, and entire nations. It marks the long overdue beginning of renewed, profound trust in emerging global economies and serves as a powerful validation of the countless individuals who steadfastly refused to surrender their vision for a different financial future. What was once universally viewed as an improbable, often ridiculed dream has now unequivocally entered the tangible realm of unfolding reality, supported by coordinated global action. For the countless holders who have dedicated their time to studying, researching, and patiently waiting for this moment, this is a deeply personal, meaningful victory. The kind of triumph that transcends simple numbers and final balance sheets. As the reported global celebration approaches and the final activation window opens, one truth echoes above all others: the future is no longer a distant, abstract concept. It is here now, it is fully alive, and it is actively beginning to take concrete shape before the world's eyes. Remain hopeful, remain exceptionally wise in your actions, and above all, remain ready, for the new financial dawn that was long imagined is not a promise deferred, but a present, unfolding reality.